Madhavi, why don't I start with you? Give us your sense. How bad could it get? Is this a little, too late, as some are saying? The RBI should have moved in much earlier? Or do you believe that, in a sense, the RBI is recognizing that we are faced with a serious inflation crisis and was calibrating its move?
So I think it's the latter, as far as I understand. So essentially, the kind of pivot that we see from the RBI's end, essentially emanates from the fact that, the kind of inflation print that we are seeing in the next 1 or 2 months, or the one that we saw a month ago, was something that RBI probably was not pricing in. And the realization is that inflation is probably here to stay. The kind of forecast that they're working with for the whole year, which was sub 6%, is now going to be challenged substantially. And just to put things into perspective, if the RBI misses their inflation targeting a range of 6% for 3 consecutive quarters, they are answerable to the government of India as to why they weren't able to contain inflation. Because in the end, inflation tends to impinge much more on growth than what one really thinks about. So I think to some extent it was a late realization, and it was more of a catch-up versus what is happening in the rest of the world, and the realization that the supply constraints are here to stay, which means that given the current demand that we have in the economy, the supply would definitely be much short in supply, and thus you could probably see a much more wider mismatch between demand and supply, and inflation will essentially accentuate further from here on, unless of course controlled by the monetary policy side of the economy.
Will, you mentioned world economies, and let me take that at the moment to you, Prasenjit Basu, a head economist at ICICI Securities. The fear is, when I look at the numbers, is that we could argue this is global inflation. It's not India specific. United States 8.5%, highest since 1981. Eurozone 7.5% lifetime high. United Kingdom 7%, highest since 1992. Germany 7.4%, highest since 81. Turkey 70%, highest since 2002. Sri Lanka in the neighborhood, complete mess, 30%, highest since 1948. Should we look at, therefore, the glass as relatively half full, that we are better off than some countries, or the fact that we too need to get out of this mood of denial that we've been in for several months now, that things will get better?
Look, in India, inflation of 6% or slightly above 6% isn't that unusual. If you look at the last 40 years, we've often had inflation of above 6%. In fact, from 2009 to 2013, inflation was consistently above 10%. So we are used to this higher inflation rate. In the US, to have inflation above 2% is unusual, and they are at 8.5%. So it is a serious problem in the rest of the world, perhaps less of a problem for us, relatively speaking. Now, I think the important point to understand, though, is that Europe is about to shoot itself in the foot by banning all crude oil imports from Russia within the next month and a half or so. Now, if they were to do that, it would probably cause a recession in Europe in the second half of the year. But in the short term, it would result in an even higher oil price for the rest of the world, because 11% of world exports of crude oil come from Russia. If Europe, which takes 48% of those exports, bans all imports of Russian oil, then it's going to be very negative for world oil prices. Now, in addition to that, we've had a ban by Indonesia on crude palm oil and refined palm oil exports, which basically means the largest exporter of palm oil in the world has decided not to allow any further exports from their country, at least for some time. That has pushed palm oil prices to an all-time high. And we'd seen that cooking oil prices were moving upward. Now, this Indonesian action has made it worse. So are you saying,
Prasenjit, it will get worse before it gets better? Are you saying, particularly given what's happening in Europe and in the neighborhood, it could get worse before it gets better? Prices could go up further. We could be back to 2009, 8-10%?
Well, I don't think we'll be back to 8-10% inflation, because the RBI has started taking preemptive action now. Also, it's important to understand that monetary growth in India is actually pretty moderate. Right through this period, this COVID period, average broad money growth in India was only 11%, compared to a 15.4% average for the last 30 years. So we actually had lower monetary growth during this COVID period than India had in the previous 30 years. That's a sharp contrast to the US. If you look at 60 years of monetary growth in the US, average for the US is about 6.8%. During the COVID period, it was nearly 19% for the US. So the US had extraordinary monetary accommodation, which they are now having to roll back. India didn't actually do that. And so our inflation rate is picking up because of oil, because we are a big importer of oil. And of course, oil prices are pushing upward, and they're going to push upward over the next 6 weeks, I think in particular,
Right.
because of the likely action by the European Union. And so what we've basically got is a commodity inflationary spiral, which does, of course, affect us because we are significant importers of crude oil. But interestingly, from the external payment standpoint, we have very strong export growth of petroleum products. Refined petroleum products are soaring even faster. So from an external payment standpoint, we're in pretty good shape. But inflation is going to be a problem. And that is why the RBI had to take this action between meetings. It's 5 weeks ahead of its next scheduled MPC meeting. The RBI had to intervene and raise rates. Remember,
as I said, there will be
that
those.
Rates have merely gone back.
Sure, but there will be
They've
those
gone
who
back to where they were in May 2020.